Hello and welcome to Earnings Echo. We put together the most important information about Astera Labs. We're basically looking at a company trying to become the central nervous system for the AI revolution. And today's mission for you listening is really just figuring out if their, skyrocketing valuation is actually justified by the plumbing they're building for data centers.
Yeah, let's dive straight into the Q1 2026 hard facts. Revenue just hit a record $308.4 million. That's up 14% sequentially and like a massive 93% year over year.
And I'm guessing the bottom line followed that same trajectory.
It did. Non-GAAP EPS reached 61 cents. So both of those metrics just blew right past management's prior guidance.
Okay, but what about the outlook for the rest of the year?
Right. Well, Q2 guidance is pushing even higher. They're projecting revenue between $355 and $365 million, with EPS climbing to somewhere between 68 and 70 cents.
So for you listening and evaluating this massive momentum, the immediate question really is causality. I mean, are we just seeing a short-term bump from companies hoarding AI infrastructure, or is there an actual sustainable structural shift happening under the hood here?
The operational data definitely points to a structural shift. Over a third of their revenue was driven by their PCI 6.0 portfolio. Essentially, I mean, PCIe is just the standard highway that connects different parts of a server.
Right, it's the basic data transport layer.
Exactly. And version 6.0 is an ultra-fast lane built specifically to handle massive AI data traffic. Plus, their non-GAAP gross margin actually expanded to 76.4%.
Which shows some serious pricing power for a hardware vendor.
It really does. And that was driven by a favorable product mix in their signal conditioning portfolio.
Let's translate signal conditioning for a second. When data travels insanely fast, the signal degrades, right? It's kind of like a radio station getting fuzzy the further you drive away from the tower.
Yeah, that's exactly how it works.
Astera's hardware basically acts like a signal booster to keep that data crystal clear. But what happens as they shift focus to their new heavy-duty switches?
Well, the primary catalyst going forward is their flagship Scorpio X series. It's a 320-lane scale-up switch. Initial shipments just began this quarter, but it ramps to full volume in the second half of 2026.
Okay, so they're scaling up hardware production fast.
Yeah, management expects it to be their absolute largest product line by year-end.
See, this is where I have to push back on the mechanics. Scaling up merchant hardware typically compresses margins. As this massive hardware-heavy Scorpio portfolio rapidly scales, can Astera actually maintain that pristine 76.4% gross margin? Or, are manufacturing costs going to inevitably drag it down?
It's a valid risk, but management's tone on the earnings call reflected extreme confidence against margin degradation. They're basically riding secular AI tailwinds.
By expanding their footprint per serve.
Right. Expanding what they call their silicon dollar content to over $1,000 per XPU. And an XPU is really just a catch-all term for any processing unit, like a GPU. They're offsetting hardware costs by embedding features directly onto the switch.
Like in-network compute capabilities.
Exactly. That processes data while it's still moving, which, drastically reduces the networking bottleneck for large-scale AI training.
Okay, so they aren't just selling dumb pipes, they're making the pipes smart, so you need fewer legacy switches. Did they highlight specific avenues to sustain this hypergrowth?
Yeah, they detailed 3 future pillars. First, custom NVLink fusion. Second, KV cache design wins using customized CXL memory controllers.
Which, in plain English, just helps AI models access their short-term memory much faster.
Right, spot on. And third, a 2027 rollout for NPO and CPO, which stands for Near Package and Co-Packaged Optical Solutions.
Let's pause on that optical transition because it's vital. Think of legacy standard copper wiring like congested city streets. Moving to optical solutions like NPO and CPO is like building high-speed fiber optic bullet trains right onto the microchip itself.
It's a massive technological leap for the industry.
It is. NPO connects multiple server racks, and CPO supports even larger domains with way higher bandwidth. But we have to align all this operational optimism with the valuation reality. Let's look at the reverse DCF model. Briefly, for you listening, a reverse DCF isn't an exact science, but it acts like a mirror, showing us exactly what level of future growth the market has already baked into the current stock price.
Yeah, and the market expectations are huge. At the current $251.71 stock price, Astera Labs holds a $44.4 billion enterprise value.
That is a steep premium.
Very. And if we assume a 12% WACC, the weighted average cost of capital, basically factoring in the risk of them being a smaller cap company, the implied 10-year free cash flow compound annual growth rate is an aggressive 40.92%.
Wait, so that math requires them to scale from a base free cash flow of just $282 million to roughly $8 billion in year 10? Does a valuation that literally prices in absolute perfection for a full decade leave any room for disappointment?
Honestly, the data suggests virtually no margin of safety. Astera Labs is rapidly pivoting from a basic I/O component supplier to a holistic, rack-scale AI fabric provider.
We want to control the whole ecosystem.
Exactly. They're trying to capture the entire data pathway between GPUs, making that leap from standard copper into those highly complex optical engines we just talked about.
So the ultimate echo for the investor today is this. Operational execution is currently flawless, but the share price leaves zero room for error. The upcoming 2027 optical and custom silicon ramps are critical to watch.
Absolutely critical. If they fail to execute that jump from copper city streets to optical bullet trains, that pristine 10-year pricing model completely shatters.
The runway is perfectly clear, but the altitude they need to maintain is just staggering. Which leaves you with this final thought to chew on. If Astra's entire valuation hinges on successfully redefining data center architecture by 2027, what happens if the AI titans, like NVIDIA or AMD, decide to just integrate these optical solutions directly into their own chips, cutting out the middlemen entirely?
That is the real billion-dollar risk to monitor.
And finally, the obligatory disclaimer. All content in Earnings Echo is AI-generated information and does not constitute investment advice. Investing involves risks. We assume no liability for your investment decisions. Do your own research before taking action. Numbers checked, portfolio prep. Catch you again soon.